After the year-end 2021 earnings release, Ark has dumped nearly 50% of their Palantir position, which is close to 13.5 million shares in addition to what they sold earlier this month and the end of January. Until the middle of January, Ark was the buyer of Palantir in the $16 to $18 range, and last year in the 20s. So what has changed that Ark decided that even with the decline in its stock by 30 to 40% from their recent purchase, that Palantir stock is no longer worth for them to hold in their innovation and disruption funds. Palantir numbers were impressive in my view and in line with the growth company. 41% revenue growth, 29% operating margin, $1.55 billion revenue, and nearly $420 million of free cash flow, zero debt, and $3.8 billion of remaining deal value. As I understand from my Twitter feed, the reason Ark quoted for this sell is the decline in the growth in the larger government division. So let's take a strategic lens on the Ark selling of Palantir. I'm your host Sachin and welcome back to channel. So let's start with the Ark thesis on Palantir based on what they have shared in public so far. Last year in Q1, during a CNBC segment, Cathie Wood said that the Palantir CEO comments are music to her ears. She said she upped her bullish position in Palantir after hearing management's comment about aggressively investing in the future. Her exact words were, "It's exactly how we invest. We want our companies to invest aggressively. We do not want profits now." This statement was in line with Ark philosophy on investment for the longer term based on their research and thesis in disruption and innovation. She also shared further views on Palantir as a long-term player and in her thesis considered it as a strong and leading candidate in enterprise SaaS, even stealing AWS in the cloud market in the future. Except for few trimming sales, Ark has been a buyer of Palantir mostly over the last year and until recently January 2022. So what changed suddenly? Since Ark was a buyer until recently as close to mid-Jan, it is fair hypothesis that the change in opinion has happened very recently and it has to be quite major change as they were the buyers of Palantir in $16 to $18 range and decided to dump it in the $10.5 to $13 range. Since Ark maintains a minimum hurdle rate of 15% for 5 years for any company as per their own admission, the number breaks down as follows. If Ark on average bought Palantir at $17, then they expected the company to reach a valuation of $68 billion in 5 years to pass the minimum hurdle for investing. Since their position was reasonable and given the approach of sensitivity they take, it is fair to assume that overall they expected Palantir in range of $70 to $90 billion at least in 5 years. That is 3x to 4x from the current market cap of $22 billion. Then they decided to dump the position. So by their own admission in past, that what they have shared about fund mandate, it has to be linked with the decline in their valuation of company's ability to meet minimum hurdle rate. That is at 22 billion of current market cap. They expect now that Palantir will be worth far less than $44 billion market cap in next 5 years. That's like 50% change in valuation about thesis. In sector, they themselves reported over $100 trillion worth of value to be created in this decade. In Ark thesis about Palantir, they never mentioned that the government moat as reasoning for sticking with it and reasoning for growth. In fact, by their own admission, they said that CIted is stealing business from AWS, which implies that their view was based more on the commercial growth prowess of the company. Now, commercial growth for Palantir was 47% year on year, and they are almost increasing their sales force to additional 200 people in 2022 from the current 29. The difference between GAAP and adjusted operating margin has gone down by half. And Karp clearly mentioned that it is one metric he is focused and will converge on it in coming quarters. US commercial revenue growth was 132%, which is phenomenal by any standard. In fact, the commercial growth has been steadily rising since they have gone public both in US and in non-US market, especially given that COVID has heavily impacted their ability to expand in new markets. But despite that, Ark view on valuation changed by almost 50% on PLTR based on their implied actions. The reasoning of it was given as government business where growth has declined. The government revenue growth declined from 76% from Q1 2021 to 26% Q4 2021. Isn't that market was expecting since DPO and repeatedly saying that government business is already quite large and will slow down and we need evidence of sustained commercial growth, which Palantir has provided over the last year. Also, government business is more cyclical in nature, and as Palantir is now nearing IL6 certification, that is likely to open a whole new level of government TAM again for them. They are sitting on many government panel discussion and have a deep working relationship that shouldn't be discounted even with an unfriendly administration. Our innovative and disruptive companies are going to produce sustained growth on all submetrics quarter after quarter in the scale up phase? No. Because if that is the measure, then Ark should sell almost half of the companies in their own portfolio. Palantir did exactly what they said they will do in year-end 2020 earnings 1 year before and kept good guidance even in this year's earning. Also, if government growth slowdown is the reason for selling, then why did they started selling 3 weeks before earnings? In short, things don't add up as Ark has presented to us, even by their own statements, fund functioning and view on company. They did not make a single statement on how likely that commercial growth rate alone can maintain the requirement for the 15% hurdle rate over 5 years. In field of investing and finance, smart talking has its place, and you can wrap up any kind of useless logic at time in the articulated form and wash your hands. In my opinion, our problem is following, and they are shying away from citing the real reasons. ARK ETFs has been in decline since last February, and attack on its performance has been increasing by media more and more. The ETF has become a preferred choice for many to short and hedge against market since last year. Kathy and ARK team is paid a fraction of fees on the total asset under management. So more the assets under management, more the fees for them. And this is the pain point. Due to decline, there has been significant outflows from the ETFs and it has impacted the fund performance and their take-home income. Kathy and ARK team is under pressure to arrest the decline of the fund and have mixed near-term trading heavily in what was supposed to be a long-term buy and hold strategy. In short, the fund in my opinion is no longer true to its mandate. The reason for selling Palantir was simply driven by the objective of a short-term gain from another stock, which they think could appreciate better in terms, and in this case it is likely Roku. We all have seen what happened with Roku stock also during the same time. Kathy published an article in December titled "Innovation Stocks Are Not in a Bubble. We believe they are in deep value territory." In this article, she discussed, perhaps influenced by negative headlines in the media and by the inherent volatility of our strategy, some clients have sold near the bottoms of market cycles, turning what otherwise would have been a temporary loss into a permanent loss. She said that for that reason, ARK places significant focus on its 5-year investment time horizon. Its primary message is that innovation solves problems and is expected to transform human lives at an accelerated rate during the next 5 to 10 years. She said that historically and according to ARK's research, this concentration of our portfolio during correction has led to significant absolute performance and relative outperformance as the market rebounds. She also said that after correcting for nearly 11 months, innovation stocks seem to have entered deep value territory. Their valuations are fractions of the peak levels. Many skeptics attribute their outside returns last year to stay-at-home stocks and expected their fundamentals to deteriorate this year. This is another tactical mistake she made, which was more based on the hope than evidence, calling the bottom of a market couple of times in December and January without any sign of actual reversal. In fact, if history is any evidence, the declines in the last phase are quite massive and sudden. ARK ETF is underperforming the major indexes by a huge margin. Even the flagship companies they embodied historically like Tesla. So here is my view on what they are doing. Their fund is under heat over performance and their narrative over inflation and bottom of the market is being challenged. They are seeing high outflow, which at the end of the day is impacting their take-home salaries and bonus. They produce no to limited evidence of some of the near-term trades and flip-flops they have made in several stocks, including Palantir, and instead try to hide it by well-articulated mumbo-jumbo only. Their lack of access to private market has left them handicapped at a time where most innovation and disruption based companies have seen appreciation in valuation in private market despite what was going in public market. So they have no hedge and respite. They have badly mixed near-term trading activity into what primarily should be a buy and hold strategy. They're sending good money after bad. In my view, there is only one reason to sell Palantir for them, that is to free cash to buy companies which they think will help in arresting the decline of ETFs in near term. It's futile in my opinion and hurting them even more. At this time, their recent activities are less based on research in my opinion, but more by human impulsion that has been the kryptonite for many fund managers. The single metric they are focusing most likely is asset under management and which is on decline. In short, Ark has lost its way and mission and now likely under the influence of same issues that most funds struggle and often become a one-hit wonder. I wish Ark Invest and Kathy would success and I hope she discovers her mojo for the sake of her investors. Kathy and Ark investment actions and recent sale on Palantir has zero impacts on my own conviction about the company. But that's me and you need to find your own reason for conviction in Palantir. In full disclosure, I am personally long in Palantir at a personal level. I'm sharing it as a part of disclosure, not as a part of financial advice. Please be advised that the purpose of this video is to educate and teach tools on how to deploy strategic thinking on business and investment problems in an outside-in manner. All contents are presented for education, information, and entertainment purpose only, and no portion of this content should be used as financial advice. Please do share your feedback in comment section, and if you enjoy the content, do like the video and subscribe to the channel. See you next time. Goodbye.